Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, markets have recovered from the day's lowest point, but Nifty is still trading with cuts of almost 1/10 to 0.2% in today's trading session, even as of now. What's the outperformance and where the outperformance today that we're seeing coming in is from the broader end of the market. So yes, mid-cap and the small cap managing to hold on to gains. Look at the mid-cap right now, right? 0.6% of gain is what we're seeing for the mid-cap. Nifty Bank, that's also trading with a positive bias. So 1/10 to 0.2% of gain that I've seen coming in for the Nifty Bank as well. So market setup, yes, recovered from the day's lowest point in terms of the Nifty 50 as well as the sensex. Broader end of the markets continue to do well. And in terms of sectors that we should look at today, we have PSU banks also that is managing to hold on to very good gains. So obviously the banking pack, and in that specifically PSU banks, that is doing well. All these PSU banks are managing to hold on to gains. Realty, Nifty Realty is also among the top sectoral gainers, so keep an eye out on that front as well. And FMCG, today that is also chirped up in the trading session. So a lot of news flows that is coming in. We have the last day of earnings season, so some of those earnings that are being reported, which is keeping some of the broader end of the markets in the trading session on the positive bias as well. But this is a show where we solve all your stock-related queries, and to do just that, today we're joined by Ashish Kyal of Wave Strategy Advisors as well as Gaurang Shah of Geojit Financial Services to solve all those stock-related doubts. Gaurang as well as Ashish, good afternoon, and thank you so much for joining with us on the show. Ashish, before we start with the queries, a quick check in terms of the levels for this week. What are we keeping an eye out on? Today, we are seeing that recovery coming in. Overall, global cues were not that exciting. Asian market also had opened up in the red. What are we watching out for now in the Indian market front?
Hi, afternoon to you and all the viewers. If you look at the overall trend, market has been moving in a very broad range since almost 8 to 10 days or more than that now. The lower end of the range is around 24,480, which it is protecting. The upper end of the range is around 24,900, so it's not going anywhere. So it's essentially buy on dips right now. And overall, we are expecting markets to again move towards the upper end of the range, which is around 24,880. And specific stock action has continued. So even in this kind of a movement, we can clearly see the outperformance coming from small cap space, and then the stocks has outperformed. So overall, the undertone is still bullish. I think if 24,900 is broken out positionally, we should reach towards 25,300 eventually.
Okay, surely keeping an eye out on those levels over there. But let's get started with the queries for today. The first query we have is coming in from Hema Roop, who's writing to us from Bangalore. Holding 130 shares of Kalyan Jewellers, price is 171 rupees per share. Long-term investor wants to know whether to hold or sell. Ashish, what's your view coming in for Kalyan Jewellers? What are we watching out for? Given that numbers this time in Q4 were also strong, so the performance seems to be fine. But levels that one should keep an eye out on, and they bought it at 171. So does it make sense that they continue to hold this, or maybe just get out of the stock right now?
See, first of all, I would like to congratulate, because holding from 171 the stock all the way, it's commendable, because people do not usually hold on to the multi-bagger stock. Having said that, Kalyan Jewellers has shown a very steep cut. If you check in the month of January, from around 800 levels, went to the low of around 400. Now showing an attempt to bounce back. So my suggestion would be to possibly partial profit book here, since the entry is pretty decent. Book around 50% of the profit, and remaining continue to trail it with a stop loss on the downside at around 515. On the upside, the stock has potential to reach towards the level of 650 again, and that is where we can look out for booking the profit of the remaining position.
Okay, that's the view coming in there from Kalyan Jewellers. Moving on to the next query for today. This is coming from Ravi Kumar. He's also writing to us from Bangalore. He's holding 250 shares of IndusInd Bank. Price is 830 rupees per share. So making some bit of a loss on this one. He's worried about the current, updates that we have in terms of news flows, those accounting fraud scenarios, obviously the change and rejig in terms of management also that we've seen coming in. So he wants to know whether he should switch to another bank or stay invested in this one. Gaurang, your view on the fundamental front for this one. What should they be doing, right? Because right now everyone is worried about IndusInd Bank. I'm sure he's just one of these investors who's there. What should they do? Should they stay or look at another bank?
Thank you, Vinny, for having me on the show. Good afternoon to you, Ashish, and all the viewers of CNBC TV18. Well, I do agree with what you mentioned, Vinny, that there was a lot that happened in the bank. especially with that 1,900 crore plus derivative loss. Appropriate steps were taken, though the disclosures were given out to the market later on. The market got the sense of it much earlier. Post that, we had, I believe, three outside audit agencies doing a forensic audit, and they have come out with a recommendation. RBI also did what it needed to be done. And then, of course, after that, we had 5 individuals who were blacklisted from participating into any kind of market activity and dealing into the shares of IndusInd Bank. As a disclosure, our research team has a hold recommendation. The good part about the current situation is that post the loss of 1,950 crores and the correction, the bank has managed to recoup those losses. And his investment level is not far away from where the stock is trading. You held on to the stock in the bad times. I think possibly you will say much better time. Maybe the impact of derivative loss could reflect in the first quarter as well, this new financial year. But post that, I think there should be a better time. Currently, our fundamental team has a hold recommendation on the stock. So continue to hold.
Okay, hold recommendation on the fundamental front. Yes, near term, maybe some bit of that impact that you could see coming in, but otherwise, it's fine, and hold is the recommendation there from Gaurang. Ashish, your view on the technicals, is it similar? Should the investor continue to hold on the technical front as well?
Yes, I think so, because the stock post the chaotic sell-off that we saw on 12th of March formed a low. And since then, it has been trying to recover. So the overall trend, it has filled the gap also, which it created on the downside. And there is a possibility that it might consolidate. So the time horizon has to be extended at least for more than one and a half year. And then we can expect the stock to continue to move back on the upside. So there is an immediate hurdle, which is the gap area at around 925. And if that is crossed, we can expect the positive trend to continue. So my recommendation is hold over here and expecting 925 over near term. And on the downside, the support for the stock is at 750.
Okay, keep an eye on those levels over there for IndusInd Bank on the technical front as well. Next query for today is coming from Vijay, who is writing to us from Mumbai. He's holding 4,500 shares of ITC. Average price is 290 rupees per share. He's a long-term investor, wants to know the prospect of the stocks for the next 3 years. Gaurang, your view coming in, right? As of now, so far, we've seen numbers this time, mixed set of numbers. But ITC, we saw BAT also selling stake in the recent time as well. Overall, 3-year perspective on ITC, where should we see it headed? You know, there was a time where it was stuck at 200 and then didn't move. Is it going to be stuck at 400 and 450 range now? Or, you know, in the next 3 years, we could see a sharper move coming in?
Well, honestly, Vinny, I think, first of all, the investment is at a very comfortable zone. The number of shares that the investor is holding is also a decent quantity. Last week, we had British American Tobacco BAT offloading some of the stake in the market, and that's why we saw the stock reeling under the weather. But my sense is that rather looking at it from a large entity exiting the stock, on the flip side, somebody else has also bought it. So that's the positive that I'll take home. In terms of the sector, I think FMCG sector is going to do extremely well. We had an early monsoon, a week in advance. Expectation is that good monsoon will translate into good spending capacities for semi-urban and rural India, which will support the top line and bottom line for the FMCG companies. We have a buy stroke hold recommendation from our research team from a long-term point of view.
Okay. Buy or hold is the recommendation there for the long-term point of view. So, viewer, you can continue to hold this as well. On the technicals, Ashish, your view. Are you going to be reading about that 400, 500 mark that it's been roaming in, or what should you watch out for?
See, ITC has a tendency to be stuck at a place for quite some time when everyone gives up and then it starts trending strongly in one direction. So my suggestion would be continue to hold here. The stock has been hovering around that 400, 420 mark for quite some time. And eventually it should move higher back towards 475 levels. So over short term, we can expect the consolidation to continue. But post that, maybe after a month or so, we can expect the uptrend to resume, because it has been some time since around September last year that the stock has moved in a very broad range of around 440 and 410 levels. So from here, there is an upside potential which has opened up for 475 levels. Hold is the recommendation.
Okay, hold as a recommendation. It's moved up to around that 475 is what one could watch out for also as a level over there for ITC. Let's move on to the next query, and that's coming from Anil, who's writing to us from Bangalore. He's holding 25 shares of InterGlobe Aviation, purchased at a price of 5,300 rupees per share. Right now, the stock is trading at the similar buy price as well. Wants to know the outlook of the stock going forward. Gaurang, good set of numbers were reported by InterGlobe Aviation. There was no complaining in terms of that. They're making a lot of changes also in terms of aircraft groundings, the engine problems that they had. That is clearly seeing a bit of a resolution coming in. Outlook for InterGlobe Aviation.
So I think the issues with Pratt and Whitney engines, P&W engines, is now slowly become a thing of the past. Before the resolution was found for the technical glitch with the Pratt and Whitney engines, earlier it was difficult, but slowly large number of aircrafts which were frozen on the ground because of technical issues is now coming back to the flying fleet. One thing, Vinny, for the aviation sector, especially for an airline company, the more hours the aircraft is in the air, it is making money for the company. The more number of hours it is on the ground, it is incurring expenses. So good to see this. I was reading a report last week. Quite a few aircrafts have again come back to the flying squadron. They are adding new aircrafts either in terms of dry or wet lease. We've been maintaining a positive stance for a very, very long time on InterGlobe. Some of the other triggers for the aviation sector, like InterGlobe, we have new airports starting commercial operations in Navi Mumbai. Next year, we will have the Jewar airports commencing operations, and likewise, regional connectivity under Udan 1 and 2 should also augur well for this sector. Hold and buy is the recommendation from our research team on InterGlobe Aviation.
Okay. And Ashish, your view coming in on InterGlobe Aviation, my point is that, when you look at it in Jan, it was just around that 4,000 mark in the beginning of Jan. And now today it's 5,300. So last 5 months, we have seen that up move come for the stock, 20-30% uptick there. What should the viewer do now? Does it make sense? Because the level that he's bought it at is quite high compared to what we've seen. Do you still expect an upside on the technical level?
See, overall, from 4,000, the journey started and it then concluded at around 5,600 on a temporary basis. So from there, we are seeing some kind of a profit booking. The high which was made was in April 2025, around that zone of 5,600. And since then, it formed a double top, consolidating there. And there is no sign of negative momentum as of now. So my take is continue to hold on over here. There is potential if the stock manages to again reverse and fill the gap which created 4-5 days back around 5,436. We can expect it to move back higher towards the level of 5,800. So the overall undertone is still bullish. 5,800 is the target. And on the downside, the support for the stock is going to be around 5,300 levels.
Okay, keep an eye out on those levels over there for InterGlobe Aviation. Hold coming in both on the fundamentals and the technical front. But on that note, we're going to slip into a very short break. And as we slip into the break, we are excited to unveil our brand new global business news channel, this all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m. Welcome back to Your Stocks on CNBC TV18. We still have with us Ashish Kyal as well as Gaurang Shah to answer all your stock-related queries. So let's keep it going then. This next query is coming from A. Subramanian, who's writing to us from Chennai. He's holding 100 shares of Sula Vineyards and this at a price of 643 rupees per share. Wants to know whether to hold or look to sell this one. And they've reported the numbers also. When they reported the numbers, it was a bit of a muted performance that came in this time as well. Stock is currently trading at 295 rupees per share. The buying price is very high. Ashish, what should the viewer do? This is, I think, at the highest point around when that stock was at around the 650 levels that the viewer seems to have bought it. So now what should they do with this one? Hold or sell?
See, the movement of the stock has been on the downside after it made a high of around 600, 650. That's a very high level that he bought, and he has been holding on to it. The stock has corrected more than 50% from there. The overall undertone still remains on the downside. So my suggestion would be it's better to be out from something like this. And instead of Sula, it's better to be invested into some other stocks, which can be something like Indian hotels or some other stock. And overall, there is no, even if you look at short term, since around 7-8 days, the stock has been forming constantly red candles. There is no buying emerging from lower levels as well. So the overall undertone is bearish. It's better to be exiting from here.
Okay, better to exit from here. That's a word coming in from Ashish. Let's move on to the next query for today. This is coming from the next query is on Wabag is what we're talking about. And it's coming from Vishal, who's writing to us from Dubai. He's holding 80 shares of Wabag, and this is at a price of 663 rupees per share, making a profit on this one. Stock is currently at 1,642. Wants to know whether it's a right time to add more stocks. He's a long-term investor, not looking to sell. So Gaurang, you know, Wabag has given a very good return in the last couple of years as well. Specifically, fundamentals, does it merit holding the stock, actually adding the stock is what the viewer wants to know.
Honestly, first of all, congratulations to him. He's making almost about 80,000 rupees on 60 shares that he bought at 660, 670 of VA or Wabag. This realization should have come much earlier. If you had bought it at 680, the stock gave you an opportunity at higher levels. But nevertheless, let me give a prudent disclosure over here first, Vinny. Our research team has a buy coverage on Wabag / accumulate coverage. This company operates in water-related challenges. It has operations in water waste management and desalination of water. It's a company based out of Chennai. Very strong fundamentals, and in fact, last 1 year to 1.5 years, this company was able to bag orders consistently quarter over quarter, and it has got great capability in terms of execution. The order book, we have accumulate / hold stance. So yeah, I mean, if you are looking at adding to the stock, I think you should definitely do that.
Okay, can look to add at this level as well. Good stock, good company coming in there as well. And, you know, they've seen good growth also overall. Their commentary also hasn't been bad. When I was looking at Q4 flashes also that are coming in, you know, good commentary so far that they've been to CNBC-TV18 as well. But on the technicals, Ashish, does it still merit adding more? Or would you just say, wait out, you'll see some bit of a correction, then add?
See, the overall stock is in a bull trend. And after a consolidation or the correction that we saw, it formed a double bottom near around 1250, showed a very strong breakout from there. The stock, my suggestion is stock has already run up from 1250, currently at 1640 levels. It's better to use some kind of a dip, maybe any kind of a dip towards 1540 or 1550 would be an ideal level where you can look out to add, and then aiming for 1900 and above levels. See, the overall medium to long term trend is still intact on the upside. Use any kind of dip as a buying opportunity for the upside target of 1900 and beyond.
Okay, keep an eye out on those levels over there for Wabag or Wabag. Let's move on to the next query for today. Sulochana is writing to us from Kolkata. 200 shares of Praj Industries is what they're holding at a price of 500 rupees per share. She's asking if she can hold the stock for another year. Praj Industries, your view, Gaurang, on this one?
So, Vinny, I'll keep my comments restricted to the sector and the opportunity that lies. So, ethanol has been a big story for this company. But over the last 6 months, there is some kind of stagnation on the stock. In terms of blending of ethanol into petrol and diesel by oil marketing companies, mandated is about 20%, but we are hardly doing 5%. Last 3 years, there have been consistent price hike in terms of per liter of ethanol prices. And the order book of the company looks decent enough. But I think it has got into a stagnation, stage, Praj Industries. Won't give specifics since my research team does not have any clear recommendation on this one.
Okay. And Ashish, your view for Praj on technicals?
See, Praj Industries made a high of around 867 levels in the month of December 2024. Since then, it has corrected very sharply. And it has broken the previous support level, which was 490. It's just around trading around that zone right now. So my suggestion would be possibly to exit from here and use pullback to exit. There is over short term possible that it can move towards 520, 528 levels. So use that pullback as an exit. And on the downside, the immediate support for the stock is around 465.
Okay, keep an eye out on those levels over there for Praj Industries. Next query, Dheeraj is writing to us from Mysore. He is holding 48 shares of Gujarat Fluoro. This is at a price of 3,797 rupees. Wants to know whether he should hold for 1 month or look to sell. Short-term query, just a 1 month time period that they're talking about. Ashish, your view on the charts and technicals?
See, if you're looking at 1 month perspective, over past 3 days, the stock has moved from 4,000 levels now to around 3,570. Has shown short-term correction. So my take is over the near term, there is a possibility the stock might move down from here towards the level of 3,350, which is the prior support. So it's better to exit now. There is no pullback. Even today, it's not showing any kind of a pullback after a steep correction in the previous day. So better to be out from at the current levels.
Okay, better to get out at the current levels. That's a view coming in there on the stock over there. So viewer, Gujarat Fluoro, better to get out. It's a short-term 1 month time period. So that is very short time period. So yes, look to sell the stock. That is what is Gujarat Fluoro about. But with that, we are absolutely out of time on this edition of Your Stocks on CNBC TV18. So thank you so much, Gaurang, as well as Ashish, for joining in with us. And thank you so much, viewers, for sending us your queries. Keep sending us your queries and we will get them answered Monday, Wednesday, Friday at 2 p.m. with our experts who will solve all your stock-related queries. But that's a wrap on Your Stocks. Stay tuned in for more unmatched insights and unparalleled market coverage. Keep watching Nuvama presents CNBC TV18 Market Central. Up next now, you have Closing Bell to take you through the action forward.